the labor market's been tricky, right? Because we don't know what's temporary or business cycle. We don't know what's structural. It seems like it's been kind of hard to figure that out. What are you thinking about in terms of wages?
Yeah, I mean, wages are critical. If you just think about like at a very simple level, inflation in the economy can be seen as how much are people earning relative to what their productivity is, and the difference between those two things essentially has to be prices because what they earn they spend and what they produce gets bought. It's a little more complicated than that in reality, but that kind of gives you a good benchmark of how to think about wages. And so nominal wages continue to be moderately elevated. They've come down a little bit, but still, particularly when you look at the wages of high propensity to spend income cohorts. So say you're 60th percentile and below, or your 80th percentile and below, those wages continue to grow pretty rapidly on a nominal basis, a couple, let's say 2% above where they
Mhm.
were pre-COVID. The interesting question, the key question is how much productivity are you getting out of those workers? We have seen a pickup in productivity and measured productivity over the course of the last couple of quarters, back to sort of the longer term trend line. If that continues, then we can live with 5% wage growth and 3% productivity. That's an okay outcome. I think the real question is that really durable over time? And do we get that nominal wage growth derailed by input costs like gasoline prices
Mm.
going up, 20-25%? That's a big deal. If you're in the lower income cohorts with the high propensity to spend, that shift in gas prices from the low threes to the high threes matters for you in the day-to-day basis.